where are you right now? You've graduated high school, so that means you're either in college or you're working. And if you're like me, you're looking for your next steps. You're looking for the where to start. You are looking for information on how to make sure that you move forward without making the same mistakes that so many of us make. So, what is a budget? A budget is really just a roadmap of your finances. It shows you your income, your expenses, and any goals that you might have. Now, why is setting a budget important? It shows you what you can and can't spend, so you don't end up with $1.50 in your account like I did. And it really gives you the first steps towards your financial independence that will affect the rest of your life. If this is a tool that you guys can grasp now, it will put you eons ahead of your peers and even people that are older than you. I mean, I can't tell you how many people of all different walks of life ask me questions every single day. And it gets to the point where I realize that even through coronavirus and quarantine and me losing my full-time job during this time, that I'm okay because I've prepared for things like this. I know my finances and I'm equipped for the future. And that's something that I want to give you guys today. I'm going to share my screen. And this is a tool that I provide for free. So I'm going to walk you through what it looks like and how you use it. And if you want a copy of this tool yourself, again, I give it for free. You just subscribe to my email list on my website, millsknowsbills.com, and it even gives you a tutorial video on how to use it as well. So it's really simple. You just put your name here, and it populates right there. This first section is the income. If you get paid an hourly rate, you can put that in there. If you are working full-time and you have a salary, you can put your salary amount there. I'm going to make the assumption that most of you are in college or working part-time or starting out in a full-time job. So I'm going to do the hourly pay rate right now. And I'm just going to do, let's say $14 an hour. And let's say you work 30 hours a week. And if you work that 30 hours a week every week, this would be your salary for the entire year down here. If you have an additional side hustle, like most of us do, and that gets you an additional, let's just say $5,000 a year, it updates the number down here for your total annual income. So that's just a couple of different ways to use the tool. You scroll down here and you get to the tax information. And this is going to be if you file taxes for yourself, if your parents are not filing you as a dependent on their own taxes. If you're single, you just put an X next to the single box. And you'll notice that that's all that you really have to do for taxes. Because a lot of times we don't understand how our income taxes work. We don't understand that they're progressive or marginal. We don't even know what those words mean. That's okay. Don't worry yourself with that information right now. Just know that all you need to do is put an X, click on the taxes tab, and it automatically highlights whichever bracket that you put an X next to on the intake sheet on the first tab. And it lets you know that based off of the income that you put at the top of the sheet, this would be your estimated monthly taxes. Now, this is not tax gospel by any means. It's really just a way for you to get familiar with what your gross income is versus your net income, so you can properly budget for your additional expenses afterwards. So many things go into tax preparation. So if you have questions about that, I can put you in contact with some very, very good CPAs that can answer your questions as well. So all I did was take that number, I rounded it up just for this example, and I placed it right here from the first tab. If you live in a state or move to a state that has state income taxes, make sure you put that number in here as well, and you can get that number by looking at your pay stubs. The next thing that you would do is take a look at your living expenses. Now, I'm not sure of everyone's situation here. Some of you might be relying on student student loans, financial aid in general. Parents might be helping you out, or maybe you're living at home and going to school. So not all of these expenses pertain to you. That's okay. Use the sheet to get familiar with it and get comfortable with learning how to budget what you have when you don't have a lot to keep track of. It makes it so much easier to add things slowly but surely rather than waiting until you have all of these different things going on and trying to budget them all at once. So let's just say you have rent, you have renter's insurance, and you pay for Netflix, right? Let's throw groceries in there as well. You just put the items here, and there are examples on the right-hand side, and you put the monthly payment amount. If you don't know what your groceries are, I would estimate it by looking at your credit card statements if you charge your groceries there, or your bank statements, and taking an average of the past couple months. Okay. Moving on, debt information. So I have debt information separate from living expenses because debt information has a lot more things going on. You're paying it off because there's interest. You need to make sure that you don't go delinquent on your loans, anything like that. So there are examples on the right-hand side as well if you're not sure what is considered a debt versus a living expense. And you want to list all of them here. If you are not familiar with the details of any of your loans, I encourage you to start getting familiar with them now. A lot of times student loans are deferred until after you graduate, but that doesn't mean that you don't need to become familiar with them now. So you would put your total amount outstanding, which is the total balance, right? If you're not familiar with the word outstanding, and your monthly payment amount. If you don't have a monthly payment amount right now, you don't have to include it, but you want to keep track of it so that way when you do start making those payments, you have it already listed and you have it already planned for and taken into account. Over here in the last column, you have the monthly due date. I encourage people that have 5 or more debts to put the monthly due date over here, just to make sure that you aren't paying all of your debts or large expense items all the same time of the month, and essentially just wasting one entire paycheck. Rather, if you can separate it throughout the month, it makes it a little bit easier to handle. On the other hand, though, I will say you definitely want to put your interest rate here. If you don't know what your interest rates are, please, please, please take a look at your statements, because if you look at how much you're being charged in interest, it will motivate you to pay things off even faster and not get into this financial rut that a lot of us years down the road get into. So those first 4 sections, income, taxes, living expenses, and debt payments, are what I call the mandatory of your budget, right? It's the foundation. Any money that you have left over is called your discretionary income or your extras, right? And those are things that you can spend on that you can live without if you happen to lose your job or not bring in as much income one month. These are things like dining out, entertainment, going out, things like that. So over here, you'll notice that I only have a column for the item itself, not a dollar amount. And the reason why is because these are extras. We shouldn't be allocating more of our budget than we actually have. And I'll show you on the next tab what that looks like. So I'm going to put just a couple items here. In the other expenses, I'm going to add what seems to be all of our kryptonite, which is dining out, at least. Maybe that's just me. Let's see. And entertainment. Okay. Now, the emergency fund. This should be at the top of your priority list of your extras. Just raise of hand, does anyone know what an emergency fund is? Have you guys heard of it before? Yes? Okay, some have. All right, no worries at all. An emergency fund is a fancy way of saying a savings account that covers a certain number of months of your total living and debt expenses, okay? In other words, if you were to lose your job, become injured, coronavirus part 2 happens, anything like that, where your income is lower or your expenses are higher, how can you sustain your current standard of living without going into more debt and relying on more debt to make sure that you can maintain that standard of living? You tap into your emergency fund. So for example, I lost my full-time job. I'm not too worried about it because I have an emergency fund set up. I'm pulling from that savings account each month to cover the necessary expenses that I have, so that way I can keep going and not charge my credit card and rack up interest. So what's a good number? 3 to 9 months. You guys are young. 3 to 9 months is kind of scary for some people. I would say start with 3 months. It's a good number to start with. It's a good goal. And that means that, who did I put at the top? My name? Okay, so that means Amelia needs to have about $3,300 saved up in a separate savings account for a rainy day. This number right here is calculated by taking that plus that and multiplying it all by 3. So in other words, I can still pay those items for up to 3 months. Vacations. If you know that you have a vacation coming up, plan for it. Learn from experience. For me, there's nothing worse than going on a vacation, relaxing, and then coming back and stressing about having to pay for it. It's not relaxing anymore. So try to plan for it as much as you can. If you know that you're going to go on a weekend cruise, it's going to cost you $500. Put that in there and start saving for it and setting that money aside. A lot of you guys are young and you think that retirement is probably so far off. It is, but I would encourage you to start saving a little bit at a time because it accrues in your favor. It accrues interest in your favor. I'm not going to go into too much detail in that right now because I don't think that's the main purpose of this video. But if you want more information, I have an entire video on retirement as a topic in general on YouTube that walks you through this portion in general. And then other goals, if you know you need to buy a laptop or buy a new car, these are items that are expensive and we can't just throw money at all the time. When it comes to a car, if you are in that boat, this right here, the total cost isn't going to be the sticker price of the vehicle, right? It's going to be what you plan on putting down as a down payment. So if you plan on just putting $3,000 down, that's what you're going to put down as your saving goal, and the remainder would be what you finance. Okay, I know I've gone kind of fast. Does anyone have any questions on this first sheet so far before I move on?
I have a question.
Mm-hmm.
So as far as like the years go on, you would recommend to create a new one or just add the things to the same one?
So I actually sit down and revisit my budget and reset my standard, which is where, you know, I put my income in, my taxes in, all that information. I do that every 3 months. A budget is something that is fluid. It changes often because oftentimes our financial situations change often. I sat down in January, created an entire new budget for myself, and then I sat back down in March, much earlier than April, and reset it again based off of, you know, just one income coming into our household and higher expenses coming in. So don't feel like by setting this standard that you can't change it up, right? I attribute it a lot to a belt, okay? So if you make your belt too tight, you can't breathe. And then you're just gonna let the buckle fly off and then it's not gonna work. If you make your belt buckle too loose, your pants are gonna fall down and it's not going to work. So you wanna find that belt loop part that fits snugly. It works for you. I sat down with a client a few months ago who said for her husband, and her 3 kids, that $400 a month for groceries was going to be plenty. After 2 weeks, she was doubling that budget. You don't know what your finances are until you actually sit down and start planning them out. So again, put what you can. As your financial situation changes, update it. This right here is your standard. It's your reference point. If you are looking to sit down and like balance your checkbook each month, balance your budget each month, that is another tab that I show people how to create and maintain each month. Does that answer your question?
Yes.
Okay. Does anyone else have any other questions before I move on? Okay. So the way that this budget sheet works is that it is one giant calculator. All you need to do really is put information on this first tab, and then all 4 of the other tabs will automatically populate with those numbers. So this is what your standard budget would look like, your reference point. And all of these numbers are, again, based off of what you put on the intake sheet. So $1,800 is the monthly income amount, and that is based off of the annual income amount of, I think I said $21,000, just about 22. The taxes we put in, the net income is just taking that number, subtracting the taxes, and you get that number. This expenses right here is the total of all of these items. And you'll notice that there are gaps right here because it's just being used as a calculator in case someone else had more living expenses line items. This is where they would populate. Then you take the net income, subtract the total expenses, and you get what's left over, what's called the discretionary income. And I have it up here as well as a reference point. And we use this reference point as we set a budget for our extras. Remember, we said that we were just going to put in the line items, but we weren't going to put a dollar amount. The reason why is because you don't want to overspend, right? And these are things that we can tighten the belt loop on a little bit more. We can't necessarily tighten the belt loop on rent or groceries because we have to eat, right? But we don't necessarily have to eat out. We don't have to go out. So I think that having a life is very important. Setting a budget, and I cannot emphasize this enough, setting a budget and learning how to budget now is not meant to restrict or control your life. It is meant to empower you so you can know your finances and master your money now. This is supposed to give you freedom. So budget these items out, but don't go overboard, but don't feel guilty if you go overboard. If that makes sense. So birthday gifts. I'm just gonna budget, let's say $50 a month because I have a huge family. There's 5 birthdays every month, I don't know. Dining out, I'm gonna budget $100 a month. And you'll notice that as I put numbers here, this number goes down. And if I over budget, it'll let me know by how much I over budgeted, and it'll give me numbers in red to let me know right away. Entertainment, emergency fund, that's important to me, so I'm going to make sure I put as much towards that as I can. My cruise, I'm actually going to do less. And you'll notice that I'm going back and editing my numbers. I do that with clients a lot. I do that on my own budget a lot because I realize, okay, I only have $165 left, but I have 2 things still that I need to allocate my money for. That's why I have the extras with the dollar amount on this page, so you can see what you have left over to spend. It helps you prioritize. Okay. I'm going to purposefully have $65 left over. I'm not going to allocate all of my discretionary income. Why? Because I'm going to take that money and I am going to use it to start paying off my credit card as fast as I can. Okay. This is a method that's called debt snowballing or debt stacking, depends on who you hear it from. It's a method where you put as much as you can towards one debt first, while still paying the minimum on your other debts. And by paying as much as you can on that first debt, you pay it off a lot faster than you would have just by paying the minimum. And once it's paid off, you take that monthly payment that you were paying and you stack it on top of the next debt until that one is paid off. And you just continue that cycle. So let me show you what that looks like with some numbers. On the debt tab, you'll see that if I were to pay the minimum, it would take me 333 months to pay off my student loans and 91 months to pay off my credit cards. And that's if the credit card is a fixed rate, okay? Which it's not. So I'm going to instead cut down that 91 months by taking this extra $65 and adding it to my minimum $55 and just paying that each and every month until my credit card is paid off. Why am I starting with my credit cards? Because the interest rate is higher. That's why I tell you to put your interest rate here. Depending on who you talk to, they'll give you different advice. Some people say start with the lower balance of your debt. Some people say start with your highest interest rate. I've done the math for a lot of different clients and my own finances. I personally prefer the higher interest rate, but if you know that psychologically it will help you to pay off a really, really small debt that maybe has a lower interest rate just to get you started, it's your finances, right? Do what you need to do to get started. So once I have this, what is that? I don't feel like mathing right now. Once I pay this $120 a month on my credit cards until it's entirely paid off, I'll take that $120 and add it to the $45 on my student loans, so $165, and pay that until the student loans are completely paid off. Why does this work? Because it's money that you are already paying toward debt. So if you pay off the credit card and you take that monthly payment and you stack it onto another debt payment, it doesn't feel like you're missing out on anything because that money was already out of your pocket anyway. It was already going to debt. That's why I encourage you, add a little bit more, even if it's only $10 a month. Start with something and make yourself think that this extra $65 is meant for debt. If you get a couple months under your belt and you have that mentality that it has to go there, it will become a lot easier because once that first debt is paid off, it'll take even less time to pay off the second debt and even less time to pay off the third debt. It's really satisfying. I love watching it happen. And then lastly, we have the assets and goals. Sorry, does anyone have any questions on debt payoff before I move on?
Yes, I do.
Okay.
So I actually currently have credit card debt.
Okay.
So right now I'm financially able to sort of just pay it all off.
Okay.
But that would mean sort of taking away a lot from the discretionary funds and whatnot. So What's your advice? Is it just like, get it out of the way while you can? Because going back to, because right now I'm on salary. So going back to hourly after, you know, the gig is up and whatnot.
Yeah.
Like what's better to do? Just pay it all off while I can, or?
So are you saying it will completely deplete your savings by paying it off in full?
I wouldn't be able to put into my savings. I just started putting into my savings.
Okay. I think both are important. So I would suggest maybe splitting your credit card into 3 months worth of payments. So that way you can still save. You know, you have to find that balance, right? It's always frustrating because we just want to pay it off. We just want to get it done. But I've seen time and time again with other clients that it forces them to, you know, swipe their credit card again when their tire popped and they didn't have that savings, right? So I'd say it's a give and take. Based off of your emergency fund savings goal and the balance on your credit cards, find a number that's good for you. I normally personally go for the 3 to 5 month range to pay something off because it's really not that much of a difference in the long run. But yeah, I definitely think, you know, you're on the right track, and asking those questions lets you know that, you know, you're moving in the right direction. And last but not least, paying off debt is such a great goal to have. If you're not sure what financial goals are or which financial goals that you should have, I have an entire webinar on that as well. It's already uploaded. You can watch it at any time. But don't get so caught up in paying off debt that you forget to live your life. Okay? If you want to go to Disney, go to Disney. Just make sure you don't go into debt over going to Disney. Okay? So have some exciting things to look forward to. Each month, when you sit down and you update your budget, you maintain it to see how you performed against your standard, update this here as well. So I have a vacation goal of $500 for my cruise. Based off of me setting aside $50 each month, that means I'll have all of it saved in 10 months. But let's say we fast forward a couple months and I'm maintaining my budget and I've been saving, I put a bonus in there, and now I have $350 in that account. It now goes down to 3 months left. So you'll notice that as you reach your goals, it'll tell you that you met your goal. If you're still working towards your goal, it'll let you know how much longer you have to get there. And that's the great thing about being financially independent and mastering your own money. Because if I don't like this timeline, I can reprioritize my finances. I can say, ooh, I really need to have that laptop in a year. How much would I need to save each month to have that laptop in a year? And I can update my budget. You can finagle your numbers however you need to. And then when you reach that goal, it's really, really satisfying. And I always say, have things to look forward to besides paying off debt, because oftentimes paying off debt can feel like you're crossing a goal off of someone else's list, right? That creditor's list, but you're not crossing a goal off of your own, right? It just hits a little differently. And by having something to look forward to, it keeps you motivated to sit down and actually look at your numbers of what you spent, whether it's your bank account, your credit card statement. And yes, I do mean by going through every single line item and categorizing them. I do. That's what I do every 2 weeks. It gives you something to stay motivated. This is the budget setting tool in a nutshell. Does anybody have any questions in general, or anything else that they would like information on?